Hi, welcome back. Well, it's stable for the markets at this point, so no incremental movement coming in after that 0.3% rise that we're seeing on the Nifty. Ultratech Cement is currently down around 0.3%. But this is our personal finance corner, and Hemant Rustagi of Wiseinvest Advisors joins in. Let's, in fact, go across to our first caller right away. Anayza calls in from Chennai. Hi, Anayza.
Hello, hi, ma'am. Actually, I wanted to ask that besides having a savings account, where is the safest place to keep my money?
Okay, Hemant, quite straightforward. Where is the safest place besides the savings account?
Well, saving bank definitely is a good option for someone who wants to park short-term money, but the problem is that returns are very low and the returns are also not tax efficient. Liquid fund or mutual fund can be a good substitute to saving bank account. These funds typically invest in money market instruments like treasury bills, commercial paper and certificate of deposit with a maturity or a residual maturity of 91 days. Now, the investment universe of these funds actually make them a very safe investment option. And also being open-ended, one doesn't have to really compromise on liquidity. The money can be taken out on a day's notice. So liquid fund can definitely be a good option, and these funds have definitely the potential to provide better return than what a saving bank can offer. But it's also important to choose the right option, because being a debt fund, there is a dividend distribution tax of around 25%. So if she is, paying tax at lower rate, then she should go for growth option. And in that case, if the tax rate is 10%, she has to pay tax at the rate of 10%. But like I said, in totality, the liquid funds are safe and they have a better, option of actually getting better return here. But if the money can be kept aside for 3 to 4 months, there is another option from mutual fund, which is ultra short-term income fund. But these funds can be a little more volatile than liquid fund, but they definitely have the potential to provide better than the liquid fund. So there are two options, liquid fund as well as ultra short-term income fund. But the key is, of course, to choose the right one depending on the time horizon.
Okay, Hemant, very quickly, let me read out the other SMS that we've got. Rashi writes to us from Raipur, and she would like to know if it is advisable to increase her EMI amount to reduce her home loan tenure to 10 years.
Well, I think there are a couple of factors that need to be looked at here. What she also mentioned here is that the business income is going to be a little irregular. So in that case, I don't think it really makes sense to actually opt for increasing EMI because they may find it difficult to service that. There are two factors that need to be looked at. One, every investor must have enough liquidity by way of emergency fund. So if they do not have any liquidity, then this money can be kept aside as an emergency fund. But if there is enough liquidity available to them, then actually this money can be utilized for partial repayment of the loan rather than increasing the EMI. I think that will be a better option.
All right, Hemant, thanks very much for that. So that's a wrap on the personal finance corner as well as a wrap on markets and macro. The Nifty steady with a gain of around 0.3%. Business lunch is up next.
MCX Stock Exchange, India's new stock exchange, presents Markets and Macros.